Good afternoon, everybody. My name's Andrea Wandersee. I'm with the Northeast Holly Development Association, or NEDA, and we're here today with Money Talks. We've got Tom Delwo talking to us about public service loan forgiveness. And okay, that happened quicker than I wanted it to. Tom's with the Financial Empowerment Centers and Cooperative Federal Credit Union. We're both part of a group called the Central New York Cash Coalition, and CASH stands for Creating Saving Assets, Savings, and Hope. We're a coalition of local organizations dedicated to promoting financial stability and asset building opportunities for low and moderate income families here in Onondaga County and throughout Central New York. Special shout out to the United Way, who keeps us all working in the same direction. And I'll hand it over to you, Tom.
Okay, thanks. I feel like newscasters. I would be the weatherman. No, just kidding. So I just wanted to point out that all information contained in this presentation comes from studentaid.gov and whitehouse.gov. So this is all directly from the federal government. I know this is, I'm hoping this presentation is timely for folks because there's a deadline coming up that we're going to talk about and that I think is really important.
Good afternoon, everybody.
So we're going to start talking again. So I think we can see that, Andrea, yeah. Thanks.
Sorry,
I'm
trying to turn it off.
So I also wanted to point out that there are folks out there that I've seen some posts on Twitter and some stuff going on in like, kind of news feeds I follow, that folks are being approached, digitally approached, right, via email or whatever, to consider consolidating their federal student loans into private student loans. And I'm going to go out on a limb. Others might disagree with me here, but I'm going to go out on a limb for you guys and say it is never a good idea to consolidate federal student loans into private student loans. The forgiveness programs, the payment plan options, the deferment options and forbearance options that are available with federal student loans are not available with private student loans. So never a good idea to do that. So if you're approached, also if you're approached to get help, to pay somebody to help you consolidate your federal student loans from old style student loans into direct loans, you never need to pay for that. Really, you shouldn't be paying for assistance with student loan issues. And we'll talk about getting help in a little bit. So there are some special rules that expire on 10/31/2022 that allow you to do two really important things. One, you can get credit towards forgiveness for payments. Sorry, that twice, for payments that would not normally qualify. So if you're employed, so public service loan forgiveness, we're going to talk about what makes you eligible, but public service loan forgiveness is for folks that have been employed by a not-for-profit municipality. There's a list that we're going to go through. If you're employed by an employer that qualifies, and you've been working and making payments, or even on zero payments during this pause, or zero payments when you were on income-driven repayment plans, those payments can count towards your 120 payments for forgiveness. There were some other types of payments, there were some other periods of payments, there were some other types of loans that did not qualify, and this waiver allows you to count payments made under those different types of loans or under those different types of payment plans. And so this waiver, which does expire on 10/31/2022, is something you should really look into taking advantage of. If you're not sure and you think you might qualify under this waiver, you should follow the steps that we're going to go through so that you can see if you qualify, because you may be closer to forgiveness than you think under public service loan forgiveness. Also, as I mentioned, there are certain types of loans that don't qualify for public service loan forgiveness. The federal family education loans, the old FFEL loans, those didn't qualify. However, under this waiver, if you consolidate from those loans into a direct student loan, a federal direct student loan, You can have payments you made to the old loan that would never have qualified before. You can have those payments qualify towards public service loan forgiveness. So that's a really big thing. I had a lot of clients who tried to apply before this waiver came into effect and were told, no, you don't qualify. Your payments under the old your payments are an old type of student loan. They don't qualify. You need to consolidate, and none of those payments you made to the old loan are going to count. Now they do for this limited time. So really, really important. So let's dig into the details here and talk a little bit more about what this means and how to take advantage of it. Okay. So the first thing is nothing about organizations that are eligible has changed. So if you work for an eligible organization, so that means a government organization at any level, federal, state, local, tribal, U.S. military, not-for-profit organizations that are tax exempt under 501c3, if you work for an organization like that, first responders, teachers, you are likely working for an eligible organization. You may have been told in the past that your organization was not eligible. You might not think that your organization is eligible. If you work for Syracuse University, they are a 501c3. I don't care if you're, in maintenance staff or you're a professor or you're the dean of the dean. You are, and as long as you're a full-time employee of a not-for-profit entity like a private college or private university, then you would qualify. If you don't know if your organization qualifies, okay, you want to confirm. I'm going to say this 100 times today, but studentaid.gov, and in this case, studentaid.gov/PSLF, they have a tool there. If you grab your W-2 and grab your employer's EIN off of that W-2 and plug it into PSLF help tool, it'll tell you if your employer's eligible. And once you find that out, then you can start to move forward with the process. Also, keep in mind, you do not have to work for the same nonprofit for 10 years. I worked with a client who worked for 2 different school districts. I just recently worked with a client who worked for like 5 different school districts over the time. You do need to, and I'll talk about this later, get a form from each of those employers for the time period you were employed by that employer, which can be kind of a pain, but it does not matter if there's gaps. What you need, the upshot is, you need to be employed full-time by a not-for-profit or multiple not-for-profits, but as long as you are employed full-time. And during that time period, you need to be in repayment status, and I'll talk about this a little more, some other statuses will qualify as well. But bottom line is, if you worked for 10 different not-for-profits, 1 year each, that counts, right? You just need to show 120 months where you were in repayment on those student loans. If you were in repayment and you were in an income-driven repayment plan, and that income-driven repayment plan required you to pay $0 a month, that counts. All the months on this pause count, right? So if you haven't been making payments this entire time, but we've been on pause, it's a federally authorized pause, that counts. And we're going to talk about a couple other times that count too, that didn't used to count and won't count after 10/31/2022. Okay. So again, use that tool, check if you're eligible. You can go on to the next slide. All right. Are your loans eligible? Okay, so only federal direct student loans qualify for PSLF, but under this temporary change, you have a one-time opportunity to convert, to consolidate your old student loan types that did not qualify into a new direct loan. Your interest rate may change a little bit, so be aware. You could see your interest rate go up or down depending on what the rates are on your old loans. That could happen, but bottom line, if you think you're close to, or you're probably better off moving towards consolidation, even if your rate goes up a bit, because if you think you have a realistic chance of having student loans forgiven, then you're probably going to save that money in forgiveness, not worry about a 0.5% interest rate increase. And if you want to, when you do the consolidation, when you go through the consolidation, they will give you an estimate of what your rate will be after consolidation. So you'll be able to see that. It won't be a sticker shock after the fact. And so you can move your FFEL or your Perkins loan into a direct loan prior to, as long as you do it prior to October 31st, as long as you apply prior to October 31st, and the consolidation is in process prior to October 31st, then your loan will become a direct loan and become eligible for public service loan forgiveness, and payments made under the old loans, under the FFEL loan, will still count towards your 120 months of payments. So if you've this whole time been on an FFEL loan and you've been in repayment with and you've been employed by a not-for-profit or multiple not-for-profits, you should consider consolidation so you can take advantage of this opportunity. You can go on to the next. If you need to consolidate or you're not sure what type of loan you have, you're going to start at studentaid.gov again. You're going to log into studentaid.gov. This is a screenshot. This is what it looks like. You're going to click on view details, and when you drill down into loan details, you'll be able to see, do I have direct loans? Do I have FFEL? Do I have Perkins? Also, added bonus for this is where you can find out if you received Pell Grants. And if you received Pell Grants, you're eligible for $20,000 of student loan forgiveness that was recently announced by the Department of Education. And this presentation is not detail on that topic, but I will at the end get you over, take a quick trip over to studentaid.gov to show you, because there are some updates there about the general student loan forgiveness of up to $20,000 for folks that make less than $75,000 per year as an individual, or $125,000 a year as a married couple. So just, this is where you go. This is how you find out. And also studentaid.gov is where you're going to consolidate if you need to. So if you go to studentaid.gov and you find you're in an FFEL program loan, you're going to need to consolidate. So you're going to stay in that same site and go through the consolidation process there. It's an all online process. It can be a little tricky, but it's, generally speaking, for a government site, pretty dang good, and it's quick. I can do this with someone in under an hour, and get them on the process. Okay, next slide.
I love the caveat for a government site. It's good.
I will say that the CFPB, the Consumer Financial Protection Bureau, and Student Aid have gotten a lot better over the last few years. A lot better. They used to be pretty tricky to navigate. Now they're much better. Okay, so if your loans are not federal direct student loans, then you must consolidate into a federal direct student loan before 10/31/2022. You can start the consolidation process for free here. That's the URL. That's what the web page looks like, and you'll click on login to start there. From there, it's going to take you through a step-by-step process. It will tell you what your interest rate will be after consolidation. It will import your loan information, so you don't have to enter that. It imports a lot of things. It'll also import your income information from the IRS. So as long as you do when you're doing this consolidation, it's a good idea to have a copy of your most recent tax return in front of you, because you'll need some information off of that to check against the information that you're inputting into the studentaid.gov system, so that it'll match with the IRS records and automatically import all your IRS, your income information. So that's really helpful. And what that does too is it also avoids when you do a consolidation, when you go through this process, if you want to be considered for public service loan forgiveness, there's a checkbox in there, and it'll tell you what to do. When you check that box, it says you must choose an income-driven repayment plan, one of the 4 and soon to be 5 income-driven repayment plan options that are available. The 5th one, I'll talk quickly about at the end, but point is, you need to be in an income-driven repayment plan. And when you, and it'll actually give you an opportunity to input an estimated annual income and your tax filing status, and then it'll tell you what it estimates your monthly payment to be under each of the different plans. And then you can choose the plan, the income-driven repayment plan, that provides you with the lowest monthly payment, if that's what you want to do, and then continue on with the process. And you want to complete that process again before 10/31/2022, so that you can be eligible for all of the special benefits that are included in this waiver. Okay, so once you know that you're in a direct loans program or you're in process, the consolidation is in process, and you know that your employer is qualified because you checked them on the PSLF help tool, then you're going to want to either use the PSLF tool to generate a form or use the link in this presentation, and this will be linked to the video, so folks can get access to these links. But to grab the PSLF form, and that form has to be filled out by each employer you want to be counted. So your current employer, previous employers. I have clients who I'm instructing them to, if they're not getting responses from their old employers by emailing or calling, I'm telling them, go down to their office with that form and have them fill out the section it's really just a signature. You can fill the form out yourself as long as you know your dates of employment. You really just need an authorized signature and some other details from a person who works for that organization who's authorized to say, yes, this person worked here, based on our records, this person worked here for these times and was full-time and we qualify. So really you just need that person to sign that portion of the form, and then you can submit the forms. And again, you can do this for every employer that you have ever worked for that you think is eligible. Submit the form. If you're wrong, it's okay. They're not gonna, you made a mistake. They're not gonna, you're not gonna be in trouble for like falsifying federal records or anything like that. Just, fill out the form, submit it. And the worst that will happen is they'll say, okay, well, this employer doesn't qualify, and here's why, and so those months don't count. Your goal is to try to string together as best as possible 120 payments or 120 months, really, of payment history while employed by while employed by an eligible employer, so a not-for-profit, a government, all the ones I mentioned before. Once the forms are complete, send them to the contact address on the form. And under these temporary changes, you can get credit for past payments, even if you were not on the loan type, even if your payment was not on time. Late payments didn't count before, but now they do. If you didn't pay the full amount due in that month, or even if you were not on the right repayment plan. And in some cases, they're even counting if you had 12 months consecutively of deferment or forbearance. Usually those wouldn't count because your payment stat, if you're in deferment or if you're in forbearance, your status is not in repayment, so they didn't qualify. But what the federal government is finding is that servicers were actually instructing people to go into forbearance or deferment instead of signing them up for an income-based repayment plan. And the problem there is that under an income-based repayment plan, your time counts towards your public service loan forgiveness, and your payment might be zero. So an income-based repayment plan, or an income-driven repayment plan, I should say, which is a general term for all the types of income-driven repayment plans, that plan can have the same benefit to you. In other words, you can have a 0 monthly payment under that plan because your income is low enough, but still be getting credit for payment status of in repayments and payments counting towards public service loan forgiveness. Whereas the servicers like Navient and Sallie Mae, when they were doing this, and Great Lakes and all of them were instructing people to just go into deferment or go into forbearance, probably because it was easier for them, I guess. I don't know why they were telling people to do that, but people were calling in and saying, I'm struggling to make my payment. And instead of saying, oh, well, you can go into an income-driven repayment plan, here's how to do that, they were saying, oh, well, we'll just put you on forbearance. And then people were racking up months and months and months of in forbearance, and that doesn't count towards public service loan forgiveness. And so that's really hurting a lot of people. And so the government is saying, 12 months of consecutive forbearance or deferments, 36 months of non-consecutive, it can be counting. So really, I would strongly encourage you, even if you think, well, I was in a forbearance during that time while I was working for that company, so they're not going to count it, fill out the form, send it in. Worst they can say is, no, that doesn't qualify under the waiver. But if you don't get the form in before 10/31, you're not going to be eligible to be counted for any. They're not going to even consider these payments after 10/31, or these types of statuses after 10/31. So really do it. That's what I'm saying to you. Okay. here are some resources that I wanted to put out there. So there's a detailed PSLF explainer document from the White House. It's one pager, pretty straightforward. Actually, some of the images from this presentation were cut from there. Studentaid.gov, make sure you get in there, create your account, log into your account, view your aid summary, click on loan details, see what types of loans you have now, see if you got a Pell Grant, and maybe eligible for $20,000 in forgiveness, even if you don't qualify for public service loan forgiveness. And then Consumer Financial Protection Bureau, consumerfinance.gov, has detailed instructions and guides tailored to teachers, first responders, and state, local, and tribal employees. So if you're looking for more detailed instructions for your particular type of work, they're there at Consumer Financial Protection Bureau. Consumer Financial Protection Bureau is just a great resource anyway for all kinds of things related to finance. Highly recommend that. And then Andrea, before we, I don't know if you could, but can you just hop over to studentaid.gov real quick? In the browser. Thanks. I wanted to show folks that this came out as well recently. I think this is useful. This is more related to the general loan forgiveness of $20,000 for Pell Grant recipients and under the income threshold, and $10,000 for non-Pell Grant recipients. But I thought this would be useful. Okay. So if you want to just click on the new one-time student loan debt relief. Up at the top, the little way up at the top. Yeah, there you go. And so this is relatively new, came out in the last couple of days, I guess, maybe last week. So if you just scroll down a little bit, they actually have some detail here. You'll only have until December 31st to apply. So if you just want to, so keep that in mind. The application is not out yet. If you want to click on the get details, can you click there for me? The get details, perfect. Here's kind of a one-pager overview of this. So this what do you need to know section, I think, is the one that's most useful. So these are steps you can take before the form comes out. So the form is not out yet. It's expected to be out in early October, but you can do these steps to prepare for when the form comes out. So for example, you can go into studentaid.gov and see if you were a Pell Grant recipient. And that's going to make you eligible for up to $20K as long as you were 125,000 married or 75,000. Oh, I'm sorry. It's $125,000 individual or married filing separately, or $250,000. So I was incorrect. It's actually more income. Threshold is higher than I thought. So really, if you're under $125,000 as an individual, you could qualify for this. And then, log into studentaid.gov to prepare. If you want to scroll all the way down to the bottom, I think there's a third step. Submit your application when it becomes available. So, and then again, most borrowers down there under Pell Grants, most borrowers can log into studentaid.gov to see if they received a Pell Grant. So you can really do some stuff here to get started. And this link and all this information is on the banner heading at studentaid.gov. So check that out. There's some other frequently asked questions in there as well. Okay, you can go back to the presentation and we can wrap up with our general come talk to the FEC disclosure, or not disclosure, encouragement. Disclosure sounds terrible. That's not something you want to know about. So yeah.
Oh, there we go.
One more page. You want to flip the next screen? So is there any questions? We have a couple minutes for questions too. If there's anybody. I know we're mostly doing this for posterity.
Yeah, no, but I think the recap is go ahead and check your student loans, consolidate
if
before
needed.
October 31st. How long does the consolidation process take, Tom?
So as long as your application is submitted, you could wait until, don't do this, but you could wait until like 10/31 and go online and submit the application. They're saying that anyone that submits the application for direct loans consolidation will be considered consolidated for the purposes of this waiver. So as long as you get in there and submit the application before the 31st, you should be good. You don't have to complete the consolidation. Now, to answer your question though, the consolidation process can take about 60 days. So about 2 30-day cycles, 2-month cycles. So it takes time.
So tonight while you're watching TV, go up on the website and start.
Yeah.
Great.
It's not hard. I know it can be intimidating, but it's not hard. And then
And then
if
we
you want
want
to flip
to
to the
let
last
people know,
slide,
we'll do a more detailed thing.
Yeah.
Once we have more
Right.
details on the student loan forgiveness.
Exactly. Yes, we're going to definitely do more. And then if you feel uncomfortable or concerned or worried and you want to work with the counselor on this, we have, Syracuse Financial Empowerment Center. You can go to syracusefec.org, click make an appointment in there. There's a box in the appointment for you to say, special circumstances, things that I want to talk about, and you can put in there, I need help, consolidation of student loans before 1031. And or whatever, and then we'll get you assigned to a counselor, and all of our counselors, I'm one of the counselors, and I'm working with all of the counselors to make sure that they are aware of all this stuff and that they know who to go to, and they have access to me as a resource, to make sure that they can work with anybody, whatever their situation is. So you should be in good hands if you get connected with a counselor.
Excellent. Great. Well, Tom, thanks so much for making time for us today.
No problem.
I know you'll be back in another month or so. Our plan next week is to do something with Savings 101. We always have the disclaimer we might need to change things at the last minute, but we'll look forward to seeing everybody next Wednesday at noon here on Zoom and Facebook. And thanks so much for your time today, Tom.
No problem. Take care.
Take care. Thanks.